We are also joined by Jignanshu Gor from Bernstein joining us now. Jignanshu, hi, a very good afternoon to you. Always a pleasure speaking with you. Before I go on to the overall outlook on how QSRs have been performing and what are you expecting in FY26, the first angle that I would like to discuss with you is the GST part. A lot of these companies will be getting benefits from that 12% in raw material to around 5%. How much do you think this will help aid their margins going forward, and how much of this is a positive factor to consider when QSRs are concerned?
Thank you so much for having me. It's always a pleasure to be here. There are two parts to the impact of the GST reforms that are proposed on QSR names. Part one, which I think is the more sustainable and the more impactful part, is the improvement in overall demand if the GST changes. And not just GST change on QSR on food, but in general at an overall consumption basket level. If the GST reduces the outflow for consumers, they will have more money to spend on discretionary. So I think that is what will be more exciting, because it is also more, it changes the base. On the margin, I do expect some part of the pressure that every QSR firm has been facing on gross margin to go away. But I would say a large part of that will be absorbed by the inflationary aspect of food, which they have not passed on to consumers so far, and the margin decline that they have been seeing in the last few quarters. So I'm not very, very bullish on margin impact in the short term. But I think the bigger catalyst should be that consumers should be able to go and buy more food if there is more discretionary item, if there is more money in the wallets.
Jignanshu, the last few quarters or years of this consolidation / downward move that we've seen in QSRs, does GST or the changing dynamics or the consolidation in any way change the prospects for the industry for the next few quarters?
I think what changes perspective for or the outlook for the industry is consumer demand coming back. Over the last, I think, 5 years, they've broadly struggled to perform. First, because of the competition from the food aggregator platforms, and then the significant reduction that they saw in the demand situation. I think the aggregator platform peak competition is sort of behind now for QSRs. You are not seeing any new pizza chains, for example, emerge on Zomato or on Swiggy. But where QSRs have to find, what they have to do is, I think, find growth for their fortunes to change. Jubilant remains our topic because we think it started this journey of buying growth much earlier in its journey than the others, and it's now hence being able to show double-digit same-store sales growth. But the others are still early in their journey, and they have now started that self-help effort to buy growth. So I think buying growth or getting growth what matters, and that can only be done by bringing more customers in. And that, again, can only be done by innovating on menu or differentiating your product versus others. So I would say those are the lead indicators for better performance by QSR firms going ahead.
Jignanshu, in terms of multiple things happening in terms of where government is trying to boost consumption, and QSRs are set to benefit that. There's rate cut, GST cut, there's also income tax cut that's going to come into play. Just want to understand, because it's a two-mind battle. The one side there are people who are trying to eat healthy, and the other side there's consumption boost that is happening. How do you think that both of these will play out together? And will this overall benefit QSR as a whole? And apart from Jubilant, because I know that Jubilant has been outperforming its peers, the other counter that you really like and you really think will outperform apart from Jubilant, which one would that counter be?
It's a very interesting question on whether consumers want healthy when they eat outside. I think in the larger context of Indian consumer, there are two types of people, two reasons why we eat outside. One is typically about celebration, enjoyment, marking a special occasion. Right? The other is where we do it far more frequently. And I think in the belly of the market, the larger part of India market, the main reason to eat out is still celebration, enjoyment, and not necessarily about daily eating out, and hence a very high focus on health. So I would say indulgence versus health. Indulgence wins. QSR targets those consumers who want to indulge and and get joy from eating that food out. So they both are targeting sort of different segments, and hence I think both will continue to grow at their own pace. They will keep overlapping, but largely both will grow. Uh, Besides Jubilant, so our view is Devyani has sort of reached a bottom in terms of their performance for both KFC and Pizza Hut. And there are more positive triggers in terms of performance upside for that name versus Sapphire or Westlife.
Got it. Jignanshu, Harsha, hi. Great interacting always. Jignanshu, let me ask that this cut in GST, who is it expected to disproportionately benefit among QSRs? And would this give that much needed fillip to the industry as a whole? What's your quick thought on that? Is it realistic to see very, very strong growth come through?
I would say the growth will come through gradually, not very, very strong, very quickly. That's the one line answer, because I think the translation of the GST impact into consumers coming back, there are quite a few hoops that we need to cross through to reach there. So it will be gradual and not sudden.
And your favorites within the space, Jignanshu?
So my favorite remains Jubilant, given their operational rigor. I think they need to demonstrate translation of growth into margins better over the next few quarters for the stock to react even more positively. The second is Devyani. I think they have more positive triggers in the stock ahead of them. Sapphire is market perform. I think Westlife can do better again. Its recovery will be sharp because its fall also has been very sharp in terms of performance over the last 18 months. But structurally, I think their ability to their addressable market and their profit potential isn't as large as pizza as a category. So I think that's a category call between burgers and pizza. I prefer pizza as a category more than burgers.
Jignanshu, just wondering, I mean, when you talk about triggers for a particular business, I mean, these triggers are expansion specific or some corporate event specific? Like I heard you speak about that for Devyani, for example.
Yeah, so I think it's a combination of their performance across KFC and Pizza Hut becoming bottom, and hence surprise in terms of either average daily sales per store or in terms of margins, and potentially corporate action, which we have written about as well, that if that comes through, it will be significantly positive for Devyani.
Last time when we spoke about these QSRs, we were talking about how each one of these QSRs are going aggressive in terms of where store expansion stands, but their area per square feet is coming down. Have you seen a trend as to whether revenue per sales square feet has been improving now, and will that improve going forward considering the kind of expansion that Jubilant, Devyani, etc. are doing?
So for QSRs, given that large part of their business is delivery focused, I don't think revenue per square feet really makes the right metric. But you're absolutely correct, right? They have been reducing store sizes, and the reason is they know that delivery is a way of life. They will not be able to pull back that into dine-in. For example, Jubilant, almost 73-74% of the revenue comes from delivery business, right? Versus only 26 for Domino's coming from dine-in. For the others as well, this number ranges from 55 to 65% of business coming from delivery. So I think that's why they have been reducing store sizes and focusing largely on kitchen. I think this will continue. I don't think they will become completely dark kitchens, because that has other issues related to brand awareness and so on. However, the shift towards delivery is structural, especially in this price point. where consumers know that at this price point, they cannot get both good quality food and good experience together. So then if they're not getting a good experience, they would rather get the food at home.
Okay. Jignanshu, I am not sure whether you covered too many stocks on the premium side of consumption. But how do you see that side play out? Because, again, the impact may be slightly different there. While we're talking GST rate cuts, but their likely rates will continue to remain elevated. What are the stocks that probably lose out as part of this entire consumption theme, and how bullish are you on the premiumization side of consumption?
No, I think that's a great point. So, like you rightly said, while I may not be very stock specific, but in general, um, if GST rates for, let's say, premium apparel reduce, they will benefit a lot more than value apparel, because the difference in price points will reduce by that reduction in the GST rate, right? For example, if a 1500 rupee article, 12% GST comes to 5%, that's around 100 rupees cheaper for consumers. And that increases the marginal customer base who wants to buy that product, right? And hence, you get growth largely from marginal buyers, which helps growth across all premium products. So whenever GST rates come down, I think over time, maybe it will take a couple of quarters for them to translate, but we should do better. We should expect better growth. I think the risk that a lot of folks, I think, are not talking about on GST, Harsh, right now, is if it gets delayed, uh, there are people who have pushed back their purchase. So does Q2 get impacted if, in expectation of a GST rate reduction, consumers push back their decisions to purchase? And if that GST does not happen, let's say in the next 1 month or so, right? So Q2 numbers for some of the companies where high reduction is expected might be impacted. And these may be in the automotive space or in the insurance space, on the apparel space, where, footwear, wherever. I think all of those, that's one short-term view which we need to be careful about, specific for Q2, because momentum was building in terms of customer behavior, and whether that momentum gets sort of halted in the run-up to the festive season. So that's the slight perspective which needs to be factored in as well.
Absolutely, and that's a valid point, Jignanshu. Thank you so much for taking out the time and speaking with us at NDTV Profit and giving us all those insights.